The number one reason most traders fail is because they lack a cohesive strategy. In this video, I'm going to share the exact framework and analysis I used to make $33,000 in a single hour. But quick disclaimer, although I made this much in a single trade, it took me over 10 years to be able to do this effectively. So before we go over this video and review everything step by step, I want you to know that it's going to take a lot of time and practice to be able to replicate this in your own trading. Also, I've put together everything I've learned over the past 10 years and sent out tips, insights, and strategies to over 10,000 traders, all for free. If you want to join, make sure you check out the link in the description and sign up to the newsletter. Now grab your notebooks and let's dive into the video. Hey, what's going on, guys? So I'm going to talk about a proper trading framework, and really I've only used a 3-step process, and I've been doing this for many years. I actually have gotten to the point where I'm no longer trying to add things to my system, and I think it's going to help a lot of you traders out there that are constantly searching for new things, trying to tweak your systems, and you're kind of stuck in the learning process and don't actually trust your edge to the full capacity that you're able to. So really, in order to become a profitable trader, and this is what I've learned over the years, is that you need to keep things very simple and easy to understand. That way, when you sit down in front of the markets and it's time to execute, you can focus on the things that actually matter, like risk management, the actual execution of the trade, your position sizing, trade management, everything like that. So when it comes to my proper trading framework, I only have 3 things that I'm really focused on. So first is going to be the draw on liquidity. This is going to be I would say the most important aspect to you trying to get a profit from the markets. You have to understand where is the market most likely to trade to, and based on the narrative and the bias that you actually have, creating that bias. So we're going to go into draw on liquidity. So what's required to determine what the draw on liquidity is? Well, there's multiple things. First of all, it's going to be market structure, right? Is the market making higher highs or higher lows, or lower highs or lower lows? Then is going to be, is the market in a premium or discount? Now, this is really going to be based on your time frames, but let's just take, for example, we're using the daily, 4-hour, and 1-hour. The daily is really going to be our higher time frame, and that's going to be what we're deciding our market structure. So based on that higher time frame market structure, right, all the lower time frames should line up with the high time frame market structure. All right, we're not going from bottom to top approach. We're going from top down. So taking the highest time frame that you're using and then using that time frame to determine your market structure is going to provide you with an idea of, is this market trending upwards or downwards, or is it consolidating? All right, so not only are we determining, right, previous highs, previous lows, what is it actually doing? Is it creating higher highs, higher lows? And then is that market based on that higher time frame in a premium or discount? Now you can go back as far as you want, but typically I'll look back, 3 months if the data range, 60 days. So the last 60 days, is this market in a premium or a discount? That's all I really need to know. So first of all, market structure, premium, discount, dealing ranges. Where exactly is this market resting? The next is going to be, is there any displacement? Do we see any fair value gaps? Do we see any large candles that are pushing price one direction? That kind of gives us the elephant in the room footprint on where the market might go, or where the participants are actually operating. Are they operating on the sell side, or are they operating on the buy side? So once we have our draw on liquidity, right, maybe there's equal highs that we're targeting, or maybe there's equal lows. But really, this framework is going to be most important, because if you don't understand what the draw on liquidity is, you're not going to be confident in taking those trade setups in that direction. And this is what's going to create our daily bias. And when we get into the live trade that I took on stream that made me the $33,000, you're going to see that I have a clear bias in place the night before actually taking the trade. The next piece is going to be the calendar, right? What is the macro driver that is going to drive this market, inject volatility in the market, and push price in the direction that I want it to go to? So just as an example, I'm going to flip over to Forex Factory and we're going to review this past week's calendar. Now, right now it's June 15th, so I'm not sure exactly what time you're actually going to watch this video, but you can really take these concepts and go forward with them into the future and plan your trading week around it, just like I am right now. So we're going to notice on Tuesday and Wednesday, so Monday and Tuesday, and when we get into the live trade, you're going to see that the week opened up and just traded one direction, okay? And that's leading up into CPI. And then CPI, right, this is a day that we most likely want to avoid. You see how many red folders were on Wednesday? So you're going to see in the live analysis that the market traded away from where we thought it was going to go originally. So I had a daily bias in mind coming into the week that we were possibly going to trade lower. prior to a run higher in the dollar. And if we didn't get that run early in the week, right, CPI or FOMC is going to provide that move later on in the week as manipulation, which is what we're going to see. So just based on this, we have to understand when we come to the markets on Monday or when we sit down over the weekend, and I do all my pre-trade, my pre-week analysis on Sunday night, and then coming into the market each day, I'm trying to figure out, what is the market setting up for? And when we see a calendar like this, CPI, an FOMC statement, all right, this is where you have to understand macroeconomics just a little bit, okay? I studied macroeconomics when I was in school. I didn't get good grades, but after I fell in love with Forex, I started diving into it more just to try and understand it because it's so important in understanding, where the economy's going, what's the driving narrative. And right now, everybody knows that the driving narrative is inflation and what the Fed is going to do. So is the Fed going to hike or cut rates, or are they going to leave rates the same? So these obviously are major macroeconomic drivers coming into the market for this particular week. Now, if you put yourself in the shoes of an institutional trader or a hedge fund trader or some large retail trader, right? Are we going to try and front run these numbers? Like, are you trying to guess what the inflation numbers are? Are you trying to guess what the Fed is going to do? Because this wasn't just a regular FOMC meeting. This was a Fed funds rate announcement. Okay, so sometimes we just have meeting minutes and a statement, which are pretty easy to trade. But then when it comes to an actual rate release, we don't really know what's going to happen. And this comes with experience in trading these types of events week in, week out. And I've been doing this for a very long time. And you're going to notice when there's an FOMC rate announcement in the middle of the week, typically you're going to have manipulation or consolidation early in the week. Now, once we understand this, and once that news release is out of the way, then things become more clear. And when we get into the trade, obviously my daily bias was much more clear after FOMC and after CPI are already out of the way, which leads me to my $33,000 trade that occurred on Thursday. Okay, so after FOMC press conference, all this stuff was out of the way. These are basically landmines in my way of profitability. I'm trying to avoid as much as I can some of these red folder news if it's going to be extremely volatile. But then coming into Thursday is a much clearer picture on, what direction the market might trade to after, these major events are out of the way. So, right, that's the second piece of the count. That's the second piece of my keys to framework. All right, so when it comes to trading framework, we have the draw on liquidity and the calendar. These are two major things that you cannot overlook. I think everybody is always going to execution and entry model, and they're missing these two pieces. Without these two pieces, it doesn't matter how good your execution and entry model is. If you're not understanding where the draw is or what's on the calendar, what's driving the markets actually, you're going to take executions that are against the narrative of the market. And this is why it's down at the bottom, because I think execution is probably one of the least things that we need to worry about. The biggest things is, you can basically get the execution absolutely wrong. If you have good trade management and you get these other things right, you can make money in the market, okay? Hey, before we go any further, if you want the full detailed step-by-step strategy, make sure you check out the link in the description and I'll send it to you for free. So once we have, those two things out of the way, the draw on liquidity and the calendar, next becomes the execution. So when we think about the execution, there's many different things we can talk about. We can talk about fair value gaps. We can talk about breakers. We can talk about order blocks. We can talk about OTE. We can talk about liquidity raids or turtle soups. And we can talk about balanced price ranges. Whatever the case is, when it comes to execution, I'm really just trying to find a confluence of all of those things. I'm not just using one, because one on its own is not enough context. So if I just see a fair value gap, okay, but I'm missing all the other narrative and I don't understand all the other pieces of price action, it's going to give me a clouded view of the market. And I think this is why ICT is a bit harder than some other things, because you have to understand all these things. Whereas, if you're just trading a system that has moving averages, that can be very simple. It's like this moving average crossover is what I'm looking for and nothing else. But when it comes to ICT, having all these tools is giving us a bigger picture of the market. So having the execution or entry model, typically what I'm using is any combination of any of them. It could be a fair value gap, a breaker, order block, mitigation block, OTE, liquidity raid, balanced price range. I'm only using all of them because I understand all of them. And it took me a long time to understand all of them. That's not to say that you understand all of them right now. But if you're just getting started, you can get away with just a couple of them. Maybe it's just an OTE and a fair value gap, okay? at least it's two pieces of confluence and not just one. Because if you have just one piece of confluence, it's not giving you the high probability setup. All right. So these are the three pieces of my step-by-step process when it comes to trading framework. And I've been using these same concepts in conjunction with each other for forever. I don't change anything. This is really all I need. And I don't have to go in and try and find new things to add to the system, because essentially this is really all you need. If you have an understanding of the draw and liquidity, which is one of the most important pieces, if you have an understanding of weekly profiles and how the calendar actually plays an important factor and role in how that week forms, then you have another piece that, this makes up, I would say, 70% of a trading system. Understanding these two things, you could basically have the worst executions ever and still make money in the markets. Okay, execution, in my opinion, is at the bottom of the totem pole when it comes to everything. So when we're thinking about trading framework, focus on these two things more, because if you can predict the markets properly and you understand the draw, that's going to, help you out with trying to understand the rest of it. Now that you have an idea of what's needed to properly plan and execute in the markets, I'm going to share with you live clips from this trade, starting with the daily bias, which I performed the night before. We'll go over what we saw on FOMC and CPI today. So we did talk about how we ran higher during CPI and how we were kind of above this old high back here. Kind of when we were above this old high, really what we should have been mindful of, obviously, when we're going into CPI. So in hindsight, right, before CPI, we don't really know if this market is going to expand higher or lower. Typically trying to just wait out some of these high impact news events like CPI and FOMC just to kind of see what, how the market responds. A lot of these events are much more volatile. You don't really want to front run them. You don't really want to trade ahead of the time. So really we saw, we swept this liquidity pool and then we traded back into this inefficiency, kind of lined up with FOMC. Now, what are we looking at going forward? I'm still leaning bullish on the dollar. I don't think we are really done yet with this bullish stance, just because the way that we've been trading away from some of these lows. Right now, we possibly could just be going through an accumulation phase. We're kind of really just retesting this order block in here from a few weeks back. So I think as long as we stay above some of these levels, right, we have this buy side imbalance here as well. I'm thinking as long as we stay above these levels, we should see higher prices in the dollar. Now, this would really just be a retracement. So if we were to draw out our Fibonacci tool, and if you guys are new to some of these concepts and you don't really understand them as much as you would like to, try not to get lost in all the markups that I'm providing. I'm kind of just doing this so you can kind of understand my thought processes going into tomorrow. So right now it's 8:50 p.m. at night, and I'll typically sit down the night before and plan out my day. So going into tomorrow, right, what I'm looking at is we have this really nice long wick in here, and we've traded into this buy side imbalance. So as long as, we kind of hold this level, I'm expecting higher prices. All right, now that we have a daily bias and a plan for the following day, next comes the live market analysis and execution. I don't think there's really any reason for this to drop lower, but I could be wrong. Based on the hourly chart, right, this is going to be our order block. We can mark this out. And then I guess really one thing to note for a bullish day, we kind of wanted to take out the Asian range lows before news, but that's not the case right now. So, could we get a retracement? Possibly. I mean, I would say EU definitely is the weaker pair. Well, not weaker pair, but it does seem weak. I would like to see all of yesterday's move kind of just be erased today. But you see how shallow this run was? Like now, if the news does run higher, this is like our liquidity pool. So that's one thing that I'm mindful of going into news with 8 minutes left is, do they actually want to run it a little bit higher into this fair value gap? So we do have this sell side imbalance up here. All right, so they could very easily just take it up there and then proceed to sell off. So we would take out London high and Asian session highs. Well, more of a deep run on Asian session highs before then it possibly go lower. But yeah, on dollar index, if we do run higher, obviously we have these Asian session highs from Tuesday that have not been taken. So this is like our liquidity pool that could possibly be ran to if we see bullishness in the dollar. Other than that, like the 4 hours, definitely sloppy. This is probably the sloppiest I've seen it just over the last couple of weeks, just because we have two moves going, we have one huge move going up and then one huge move going down. But, based on the daily and the weekly, in my opinion, I think we're going to go higher, but I could be wrong. So it really depends on if this run below the weekly open is going to be our Judas swing. And then for the rest of the week, we're going to trade higher. I'm still favoring this buy side liquidity pool over anything down here, in my opinion, just because we have this massive consolidation. So, right, if we are going to create like a market maker buy model, this is our original consolidation that started this down move. And then if we start, trading above these levels in here, then we could possibly see it as reclaiming buy side of the curve. But I would say like, yeah, I still prefer this trade lower just based on daily and the weekly. Like the weekly, we're back below the open, and just based on last week's candle, I think that there's still some bearishness left in this market. I'm just not a fan of going long because there's not really anything in here that we can say that we're going to go long on. Sometimes when you come to the charts, it's like extremely clear that, the manipulation's already occurred prior to news, and then it should be an easy read going one direction or the other. If this market had traded lower down into this buy side imbalance prior to news, I would say you're getting a more efficient price to possibly trade higher. All right, so there goes PPI. Now, just because we're getting a push right now doesn't mean that the candle's going to close like this. So just based on a 4-hour time frame, we kind of have to be mindful of where is this 4-hour actually going to close. If we just run these Asian highs and then collapse by the end of the hour, that's something to be mindful of. So we're above this fair value gap. So my eyes are really going to this fair value gap here. If we trade up here, then are we going to see a possible rejection? And maybe even they're going to just reject the London high again.
What would you wait for within that fair value gap? Like a 2-minute market structure shift and then take it in on the first rejection of the
I mean, to be honest, if I had like a really strong opinion on it, like I would just be shorting it as soon as it goes into that level. But yeah, if you're like lacking in, I guess, confidence doing that, like as the market's running higher, you really should be waiting for like a lower time frame confirmation. Because like if you're not comfortable doing that, it feels really weird doing it, just because you're kind of standing in front of like a moving train. But in my opinion, those are some of the best trades where you're kind of fading the move, and then you would hope to see like by the end of the hour, it actually just closed lower. We just took out Asian range lows. So what I would do is mark out this level, and I have this buy side imbalance further down here too as well. So, obviously I don't think I'm still bullish on this pair, or sorry, on the dollar index. I think one thing I did know too as well, and see like right now, if we got a strong 5-minute close, what I would say is the way I trade turtle soups is once we take out a low, if we close back above the low, that's kind of my signal to go long. And I would give myself a little bit more of a stop loss. Like if I'm going long here, I would give myself a little bit more of a stop loss. Maybe I'm using the first standard deviation down here, just because I don't want to put it at the low. You could. That's more of an aggressive approach. But this is kind of showing you like, yeah, we flushed out London session lows. This is London lows, by the way. So we flushed out London lows and we possibly trade higher. So yeah, if you have trouble trading news, like oftentimes it's easier to wait for the news release to come out and then see what's going to happen. Because right now, right, if we get a pretty strong wick at the 15-minute close, like now we have somewhat of an indication kind of going into the rest of the session that maybe this is just a false move. And what I'm looking at here, right, is this trend line phantom. Let's see if, if we get any follow through for the rest of the day. Because kind of how I'm reading, like, and when I go back through my charts, I'm looking at the news candles from like either the previous day or the previous week, whatever the case is. It's like, what exactly happened? Well, this was CPI, right? There's no wick below on this candle. And then FOMC, which I think was the stronger release, right? This dropped, and then during the conference, we refilled the sell side imbalance and then traded lower. So in my opinion, that's kind of signaling to me that I think the FOMC, the dollar should show strength still. And now there's nothing wrong with like seeing this spike lower on the news, right? I think if you were in this trade and you didn't have a wide stop, you might have gotten taken out. But if the hourly and the 15-minute close like this and your idea is still valid, like maybe you want to use a wider stop on the next one. Just because I don't think that idea is validated yet, right? Just based on this, I'm seeing we're just taking out this consolidation liquidity. And that's part of my entry rules. It's like I'm not entering until liquidity is taken out. Yeah, so 15-minute time frame on the euro, right? Got a nice wick up here. We've taken out this liquidity. It's pretty much the same thing that we would possibly see on ES. If the market is going to trade lower, we're just looking for the run on liquidity and then trying to trade to some specific target on the opposing end of the range. This one up, I would say I'm still bullish on the dollar. It really depends on the 4-hour close. Like the 4-hour close, if it just closes like this, like in my opinion, it's probably gonna just lead to continuation. I don't really see the dollar continuing lower. especially after what we did yesterday and kind of filling in this buy side imbalance. And this is kind of where your patience comes into play, because if you're not intraday trading, like if this 4-hour candle closes, right, our idea for bullish dollar prices are still on the table. But, you know, how long is it going to take for us to get there? Like, because I have targets up here, but, you know, maybe it's going to take a whole month to get up there, because this is the start of May, right? And it's kind of just been mostly sideways. But like if you were trading just intraday, you know, like I mentioned, if we got above that London low, you would have possibly went long. And you know, that kind of would have been your trade for the day. And maybe if you're just trading intraday, right? If this is your model, just trade intraday, is maybe you're just going to go long in here and then just exit at the previous session's high, right? But I have a more longer term approach. So maybe I'm trying to target Tuesday's high all the way back here. So in that case, I have to be more patient holding my trades and being way more patient in letting them pan out, right? Because you can't just get, I guess, faked out by certain, right? Because this news could have just been manipulation. About to get a nice hourly close here. Euro. I'm really looking at these lows here in Euro. Tuesday's low, and then even lower, I think, just based on the 4-hour. And the reason why I'm bearish on the Euro is just because of all this price action here, right? So this right here, in my opinion, is just distribution. Because otherwise, why would it have this move? So all this consolidation, right? This displacement, and then we possibly just have a retracement here. So that's kind of what I'm looking at. All right, guys, how's it going? So you just saw me provide my analysis to my apprenticeship program live, and that was in our private Discord. But I'm going to go over the trade that I made over $30,000 on with Funded Peaks, one specific trade, and, you know, haven't blown a challenge account with them. So I'm just showing you guys the possibility of proper trading, right? Not blowing your accounts because you're a degenerate, and being able to withdraw payouts from these firms without having to go through massive periods of you blowing accounts trying to hit massive payouts. And I will say that I did scale into this position, but that's only because I have experience in the markets, in the live markets, understanding when I can add, when I can reduce my stop losses to break even, and be able to really leverage the capital that I have without assuming additional risk. Okay. So, you know, obviously I had talked about us taking out the Asian range lows during the live session that I had called. And then I pretty much turned off the stream, but my analysis going into the afternoon was the same. And I'm going to talk about just a couple things that, you know, I was seeing in the markets coming into today, as well as going through the afternoon, which gave me the confidence to hold the trade lower. So obviously all my analysis will start with the dollar. Going into this week, I knew that there was a lot on the calendar. So basically I'm just avoiding, you know, Monday, Tuesday, Wednesday, and then coming into the markets on Thursday, and then obviously trying to find a proper setup, because Wednesday was CPI. You know, there's a ton of stuff going on. We don't really want to trade on Wednesday because just the narrative behind the macro movers. You know, how many funds out there are or institutions are really going to be positioning themselves ahead of CPI or ahead of the Fed statement? You know, that to me is just gambling. They're mostly just waiting to hear what the Fed is going to do, to give us the trend that might last for weeks on end or months on end. So clearly we have some very key levels that we were looking at coming into this week, right? So this was last Friday, and, you know, that was basically NFP. We had a liquidity raid. We had this buy side imbalance that was created, and then the week basically opened up and traded higher straight off the bat. Right, so that's kind of my indication that, you know, we're not quite ready to go long yet. And, you know, as we're above these old highs here, right, this was CPI, traded back in and filled in this inefficiency. Now, you know, just the fact that we've opened up the week and traded away from the opening price without trading lower, that to me makes trying to trade ahead of CPI, going long, extremely vulnerable, right? So this, to me, is inefficient pricing when the week opens up and it just trades higher, right? We're basically just gapping up higher. So obviously we have our weekly opening price, you know, if it's going to trade up, going lower. And then on Wednesday's daily close, right? And I had shared this in our apprenticeship Discord, that what I'm looking for is to see if this order block in here, so this order block, right, as well as 50% of that buy side imbalance, if we're going to respect that. So we got a nice long wick, and that alone is giving me information coming into Thursday, right? So we have 3 high impact news events on Thursday lined up where we could possibly see some type of volatility before we go long. All right. And when we came to the charts, I'll dive deeper into what I saw on the lower time frames, but this is just my analysis on the higher time frame. All right. So not only do we have this buy side imbalance, but this right here is our breaker. Right? So this candle is the last candle prior to the run on stops. And what I do is, right, I have the open, high, low, and close. If you can, I'm not going to point at it, but so if you have the open, high, low, and close data on, right, to the top left of your screen, you will see OHLC, right? So if I hover over this, I'm getting the data of this specific candle's low, and it is 104.589. Oh, sorry, I'm taking the open and close price, not the low. So it's 104.643. So I've written that here, right? And then I've taken the low of today's candle, right? This huge bullish candle. I'm taking the low of that. And what's the price on that? 104.642. Now, how close are these prices, right? They're, a tenth of a point or a hundredth of a point in similarity, right? So that's not just a coincidence, right? And it's lining up with the equilibrium EQ of this buy side imbalance. So not only do we have this buy side imbalance, we have this bullish breaker, and the low of that bullish breaker is basically overlapped, right? So those are two confluence levels. Now, and this is something that I haven't talked about a whole lot, but this is just something that I picked up over the years. And I believe I learned it from James 16. He was the mentor of Tom Dante. If you guys want to check it out, there is a thread on Forex Factory. It probably dates back to 2006, and it's just basic price action. It's basic, reading candlesticks, outside bars, pin bars. Now, I don't remember if I read it in this thread or I picked it up along the road from some other people, but I sometimes blend candles together. And what do I mean by that? I'm blending two different candles together. So these are two daily candles, and this is not relevant to the trade that I took today, but going into next week and beyond, it's indicating that the market is still bullish. So if you're watching this video going into the week of, the week of the 16th, just know that I'm still bullish on the dollar, right? So I am talking about the trade that I took that made me $30,000 without blowing any challenge accounts. And I'll show you my dashboard. I'm going to hide the account numbers, but I will show you all the accounts that I purchased at funded peaks, as well as the payout requests, and as well as me actually closing out the trades that I took. Okay. So if I just blended these two candles together, right, we have the open and the close of these two candles, right? So if I were to blend both those candles together, this is what that candle looks like. So this is the blended candle from today and yesterday, right? So this is the low, right? And then this is the high. But on a 2-day basis, right, it's giving us a nice long wick, right? So going into the next week, obviously, I have 50% of that range, which kind of lines up with that breaker's low. And, I'm expecting higher prices on the dollar. That's basically, what I'm looking for. So let's drop into what I shared inside my Discord. And you can scroll back, you can rewind this video. I called this out live as we were closing the candle. Basically this is our Asian range low, and you'll see me draw out the Asian range low as it's happening. And then later on in the video, I had mentioned, once we get above a certain level, right, this is our London low. Once we started rejecting the London low, I was looking to go long. Okay. And this is all just derived off my daily bias, right? Just because we saw this massive run lower on the news, right? My bias is still long. I don't care what that looked like, all right? And, going into the actual news event, I'm going to pull up my standard deviation indicator just so you guys can see what I was looking at. So, if I were to rewind this replay, this was prior to news, okay? And what I saw was we did not take out the Asian range low yet. So I had already mentioned, and this is again in the live analysis, that because that we've ran away from Asian range lows or Asian range and we haven't taken out the low, it's susceptible. Okay. And basically what happened was this is our news candle, right? We go down, tap the Asian range low, and then reject. So as soon as we get this rejection, I am still leaning bullish dollar just based on the daily chart. Okay. I don't care that the news candle just rips lower, and we can measure out how much it ripped lower. It's a pretty big move, right? This is a 30-point move on the dollar just in a matter of minutes, all right? If that's going to scare you out, then you really don't know what you're doing when it comes to trading, because you're possibly the guy getting trapped on this run lower. And then, by the end of the day, it's just doing this. It's a blend of experience, and it's a blend of reading price action live, okay? So once we got this hourly close, obviously, I'm still looking to long on the dollar. And the two trades that I took was the euro. So obviously going into New York session, we had the euro. And, you know, it was a bit sketchy, but at the same time, I was really confident in my analysis. So let me hide this. We don't need the midnight open. But this is our market structure shift. Weekly, obviously, same thing on the dollar. The weekly, right, this candle right here was Monday, traded lower straight off the bat to start the week. We took out this liquidity down here, and the market's really only searching for liquidity or inefficiency. So once we've taken out this low, right, CPI retraced into this inefficiency. We have a breaker here, right? So this is the last down candle prior to the run on liquidity, filling in this sell side imbalance, right? So there's a lot of confluence showing that the market is still bearish. So coming into the New York session, obviously the news release, I had already gone short post FOMC, and my stop was a bit higher than this sell side imbalance. So my stop was on my initial position was somewhere up here, and then after news, I scaled in again, and I'll post the little message here that I share in the Discord. Just because we had this nice retracement, you know, scaling in, obviously you can see that we just traded back up again after the news, right? So this is our 4-hour close. The next 4-hour candle came up, tested the midnight open. So this is our midnight open where it says, you know, 0-0. That's our midnight open, and then completely just collapsed. So you can see that on the news spike, right, we're still respecting that 4-hour fair value gap, right? And everything, in my opinion, is lining up for a dollar long scenario. Okay. Dollar CAD, I don't really have too much to share. I pretty much went long on FOMC, but you'll see me closing out all the positions on funded peaks all at the same time. And I basically just collapsed my position as we were up here. All right. Well, let me drop into the daily just so you understand why I went long post NFP. Or sorry, not post NFP, post FOMC. So it's basically just based off of this daily structure, right? So we've taken out liquidity, we're inside this buy side imbalance, and we're inside this buy side imbalance. So everything right now, in my opinion, this is just breaking market structure to go higher, right? So we've taken out, and this nice displacement candle here, right, I'm just seeing that as a retracement. All right, so let's pop over into the funded peaks dashboard. But you can see that I've only had 6 accounts. So, you know, 2 of them were the challenge accounts, 2 of them were the verification, and then 2 of them were the funded accounts. And you can see that I'm up 19,000 on one and 17,500 on the other. And if we go into the payouts, I've requested both. Okay. So, you know, I will say that passing these accounts took me a good 2 months just because I did not find A+ setups. And I think this is where maybe some of you guys are struggling, or maybe I can help out with. You have to understand that you're not going to get really clean conditions all the time. Like even just passing both phases took me a while. Like the first phase took me almost a month. The second phase took me almost a month. And then the funded phase, right? I'm making all that time back on just one really solid trade. Let me just show you guys like the inactive, right? I don't have any other accounts in here, right? So there's just 6 accounts that I've been given. 2 challenge accounts, 2 verifications, 2 funded. If you watch these videos and struggle to implement what you've learned, listen to me. I've created a direct mentorship program where I teach you everything I've learned over my 10-year career. I'll teach you how to trade like a business so you can scale and make real money using the same systems I use to make $1 million from prop firms. I'll trade with you live so you can see real-world application of what you've learned. I'll answer your questions real time so you aren't alone when it comes time to execute. If this sounds interesting, click the link in the description to become my trading apprentice. This isn't a requirement to become profitable, and you can easily take what I've shared in this video, but if you want a shortcut to your success, this is the best option available. Regardless, make sure to subscribe to the channel as I put out free education every single week. Thanks for watching.